Congratulations, you won an Olympic medal. You are at the pinnacle of your sport and among one of the top athletes in the world. Yet, you are still mortal, so death and taxes will come. So let's talk about taxes. First, I must point out and make a disclaimer. I am not an accountant in any jurisdiction. I am not a lawyer in any jurisdiction. I am not a financial planner. I am not a financial professional in any jurisdiction. This is purely entertainment and purely speculation. I am some random guy on the internet. For all you know, I'm lying. My source could be, I made it up. It was revealed to me in a dream. So you take bronze, silver, gold, you get the medal, maybe you get a nice stuffy. In addition, you might get money from your country or sports organizations as an incentive. Of course, there's also brand deals, fees for appearances, book advances, royalties, etc., that are more like being a regular athlete or business and not unique to being an Olympian. We're not going to talk about them as much. So what your taxes look like will depend upon your country of residence, potentially your country of citizenship, and the country that the games were played in. So let's start with where the games were played. As the games are played in a country, obviously, most nations have taxation on winnings, be it incentive money from your home country, from sports organizations like World Athletic, endorsements, appearance fees. Some also have taxation on the value of objects won, like Olympic medals and stuffies. Italy, who just hosted the 2026 Winter Olympics, they waived taxes on their own athletes and athletes visiting for the Olympics. So that's pretty simple, just no taxes involved. Now, going back to 2024, the Summer Olympics were in France, and actually the 2030 Winter Olympics will be in France. France taxes their own athletes and visiting athletes on incentive money, but do not tax the medals themselves. I'm going to specifically quote the US-France tax treaty, but from my understanding, most tax treaties with France and non-EU nations are similar. First, there's some exempted money. In this case, the first 10,000 US dollars or a euro equivalent, you don't pay taxes on. Then it is taxed 11 to 45% after that. There is a 15% withholding for most countries and jurisdictions, but it is 75% if you are from a tax haven country or jurisdiction. As I mentioned earlier, France will be hosting the 2030 Winter Olympics, and the taxation situation will likely be the same as the 2024 Summer Olympics. Looking forward, the USA will host the next Summer Olympics in 2028. And the US IRS, the Internal Revenue Service, their stance is that visiting athletes pay compensation on performances, endorsements, merchant sales, royalty income, and other income closely related to the event. The US Internal Revenue Code states that cash and non-cash prizes are taxable income. So it looks like you would be paying taxes on that medal and the stuffy if you win in 2028. The fact that the Olympics will be held in the US state of California will increase the tax burden, as California's taxes are higher than most US states. The state is also more aggressive about taxing athletes, and a big part of how they work, from my understanding, is duty days, and this has come up a bit with American football. So yes, you could have a situation where an athlete from a country that gives no prize money, you get no money from endorsements or social media work, you win a medal, and you have to pay taxes based on what that medal is worth. That would really suck to be some Norwegian that win bronze and now you owe like 80 cents in taxes or whatever it would be. It would cost more in time or money to file the tax at that point, and same thing for the government processing them. Naturally, just like France, tax treaties are going to affect the taxation massively. What is interesting to me is this creates a bit of an incentive. Not that I'm saying that this has ever happened or will ever happen, but it creates an incentive for France, the United States, and the US state of California to have athletes from countries with large prize monies amounts to win. Because think about it this way, if you're California and somebody from Norway wins, they don't get prize money. You only get to tax them a little bit, maybe on the medal. But if someone from Singapore wins that same medal, you get to tax them that same amount on the medal, but also Singapore's really generous prize money. So it creates a bit of a weird incentive. All right, now for your home country or country of residence. Most countries base taxation on residence, but if you have full or limited citizenship-based taxation, that could add taxes to it. Once again, treaties affect the burden, and they do attempt to limit or remove double taxation. The most common solution being that taxes paid in your resident country or where you are working are tax credits in your country of citizenship or residency. The United States of America Internal Revenue Code states, as actually I brought up earlier, that cash and non-cash prizes are taxable income and subject to the federal income rate. So yes, a U.S. Olympic medal winner would have to pay taxes on the incentive money, the medal, and even technically the stuffed animal. And this was true until 2016. However, in 2016, the United States of America passed the United States Appreciation for Olympians and Paralympians Act. This removed tax on the medal and incentives money from the United States Olympic Committee. If the athlete's adjusted gross income is less than $1 million. Half that if you're married and filing separately. The idea being that generally, this means that athletes from major leagues in the USA, like the National Hockey League and the National Basketball Association, along with top famous Olympians, will be paying taxes on their medals and incentive money, but others who are likely to be less financially secure will not be paying taxes on it. So, in the United States of America, money from winning a Nobel Prize would be taxed, and money from an Olympic prize would not be taxed if you met the criteria. Money from outside the United States Olympic Committee, like World Athletics, it would be included in gross income and taxed. In the US, states have their own taxes. Some, actually quite a few, follow the federal formula. Colorado, for example, explicitly exempts Olympic winning. California, on the other hand, requires reporting of Olympic winnings on state income taxes. As the United States of America has citizenship-based taxation, that also complicates things. People who are U.S. persons would be subject to taxes on the incentive money, the medal, and I guess technically the stuffed animal. Probably the biggest source of these cases in the Winter Olympics this year would be Finnish Canadian players that play for US-based NHL teams. I guess on paper, a Finn could have a really weird situation where they had not left Finland. They left Finland less than 3 years ago, so they're still subject to Finnish taxation, like they are a resident, and still be a US person for a US tax perspective. As Sweden has a 5-year period of being taxed like a resident after leaving Sweden, that situation could also happen in the future with a future Swedish player in the Olympics who also plays in the NHL. I would assume, or I would guess, the tax treaties would cover most of this, but it would be kind of a bad surprise if it doesn't and you're that dude that falls through those cracks. Although I wonder, with Canadian athletes not paying tax on the medal itself in Canada, if they would then be stuck with the taxes in the US if they play in the NHL in the US for a US team, because medals are not taxed in Canada, medals are taxed in the US. So Canada and the US are a bit opposite on this. In Canada, prize money, other than prescription prizes, are to be included in income and taxed. Prescription prizes being ones that are awarded for meritorious achievement in the arts, sciences, or service to the public. The issue seems to come up before every Olympic Games, and the CRA nearly every 2 years is publishing some article about how winning an Olympic medal is not a public service. Canada does not include the intrinsic value of the medal itself in taxation, so you're not paying for taxes on the gold or silver of the medal. So in Canada, award money for a Nobel Prize would not be taxed, but award money for an Olympic prize would be taxed. Fun side note, lottery winnings in Canada are not taxed, so you would pay more taxes on winning an Olympic medal than on winning a big prize in Lotto Max. So looking at Canadian taxes, the federal taxes, they're going to be 14 to 33%, depending on your tax bracket. However, just like the United States, you have provincial or territory taxes on top of the federal taxes, and those can range from 4% to 25.75% in Quebec. Quebec, it just has the highest taxes. The lowest tax bracket is 14% in Quebec, which is higher than Ontario's highest tax bracket. Singapore is notable for its high reward for Olympians that win medals. This is part of its major games award program. It doesn't just cover the Olympics, it covers the Commonwealth Games, Asia Games, and the award is specified as being taxable. And it's also mandatory that you give 20% of that award to your national sports association. Yes, you are taxed on that 20% that you have to give. A quick look at brackets suggests that if you win the Olympic gold medal, you're instantly in the top tax bracket too. As far as I know, the Philippines is the only nation with a set compensation for coaches of Olympic athletes and athletes in other major international tournaments, giving them half the monetary award granted to the medal winner. I ended up in the bush with the Philippines, so let's talk about it. So, the awards for the Olympics and other sporting events are set out in the Republic Act 10699, which basically replaced a previous one and made them higher. Then, under Tax Code Section 32B7D of the Tax Code, awards and prizes of domestic and international sports tournaments are exempt from inclusion in gross income. So, the money that you get for winning the Olympics, the stuffy, the Olympic medal, they're exempt. But what gets really interesting is if you win a medal and you are given donations by companies, organizations, and individuals, that falls under Section 32B3, which states that the tax requirement on those donations is on the donor side, and that the Olympian or athlete, winner of the Southeast Asian Games, Asia Games, is not paying taxes on that. Now, of course, the athlete is paying taxes on normal things like royalties, endorsement fees, speaking fees, appearance fees. These are all taxable. So it is time. Hit the like button, hit the subscribe button. Please go down to the comment section. Tell me about what incentives exist for athletes in your country. It's actually kind of wild to think about that there's a decent amount of people, I imagine. It probably varies a lot by country, who they file, they do their taxes, particularly if you're in the United States where the taxes are complicated and they become an industry unto themselves, who actually processing and dealing with them must actually cost the government more than they bring in. It's kind of wild to think. I also remember this other thing I read. I'm not sure if this is still true, but I guess that at one point, maybe this is still true, the United States government would spend more money enforcing and processing taxes for citizens that lived outside of the United States than they actually brought in on taxes for citizens from the United States, because the US does this citizen-based taxation, global taxation thing. But I guess it's really expensive to enforce. Tell me what